Trading is closed on Thursday, September 1st, 2022. Let's do our disclaimer, go over yesterday's calls, make some predictions, and show you my new long-term wave count, which I now prefer to the one I showed yesterday. Well, this is my plan for tomorrow, Friday, September 2nd, 2022. Remember, it's a plan. I can be wrong. I can change it. Any trade you make should be at your own risk. Look for the pattern with the early high, which is this. Tomorrow should have the early low. We didn't make a specific directional call, which is just as well because we traded higher, traded lower, closed, it'll change. One of these days I'm going to have the nerve to say when I can't come up with a directional call, we close, it'll change, but last night was not that day. These green lines support resistance from prior FOMC announcement prices. To review what we said, no call specifically for today. Lower prices are in play. Just remember, please, next week I won't have much time to analyze the market. I'll try to do reports, but can't promise I'll do it every day. During the day, we got a buy signal from MEJT, called the direction. It doesn't really call the magnitude because the minimum printed immediately doesn't have to stop at the minimum. It did say if we fell, it wouldn't stick, but that certainly worked. In terms of time, we should be close to a low here because of the volume spike. We also have a reversal bar on the daily chart involving the lower Bollinger Band. This works pretty well as a reversal when it's flat. When it's declining like this, it just isn't as good. It's just a potential. Well, I said yesterday I wasn't certain if that June low was going to hold, and I came up with balance of the waves in the 3200s. Still is a valid count, but I'd be happier if we could make that June low hold because sentiment readings at that low typically occur at major lows, not intermediate ones that just last a few months. I was able to come up with a count which is legitimate and in which that June low holds. So let's go over that. Doesn't mean the count's right. We first noticed that this rally, which I'm calling Magenta C, is a 61.8% retrace of wave Magenta B. So if that's B and that's C, that's a retrace. And you'd like Magenta C and Magenta A to have a Fib ratio compatible, a Fibonacci relationship. So if that's Magenta C, Magenta A is 23.6, and that works. If you look at the internals of Magenta B, you'll see an ABC where the fibs also work. So what you want to do is to find a place where gray C and gray A have a fib relationship, and black C and black A have a fib relationship. And that place is around 3,700 cash. Around 3,700 cash, C and A have a good Fib ratio. And C and A in gray have a good Fib ratio. So everything balances out. And what I really like is the balance on the longer term chart that we showed yesterday. Now, we can measure green A in any one of two ways. You can measure from its origin or from its height, and you get two different numbers. We showed 3661.50 yesterday, but if you measure from the height, you get 36 81.52, which is close enough for me. So if we count wave C ending around 3,700, that's really close enough for me. So everything balances out at that price. Once again, doesn't mean other prices aren't going to work. Just a place where I'll have my antenna up. Now the jobs report comes out tomorrow. I don't like to predict what will happen before the jobs report, but let's go over what the indicators have to say. Tomorrow's pattern has a early low, doesn't mean you won't gap up. Hit a new trend low and we closed higher. It's a potential change in trend pattern. Still needs to be confirmed. If you don't confirm it, it means nothing. You have to trade higher than today's close. If you gap down, that break doesn't count. You also would like it to trade higher than the highs of the prior consolidation. Till that happens, you're just backing and filling, and that's it. Jobs report comes out tomorrow. Can move the market in ways, at least my technical analysis can't predict with a sufficient degree of accuracy. We also have a wall into the close. It's at least possible we gap down. If we gap down, that vitiates today's recovery. And I'm just not going to predict whether or not that's going to happen. My new preferred wave count has balanced around 3,700 cash. That preserves the June low, whose sentiment indicators are typical of major market bottoms. So we might have a short-term recovery here, but it needs confirmation. Even if we recover, I think we'll drop. I'm penciling in 3,700 as a target for that drop, but I'm willing to change it. But no matter how you count this is a strong move up, and this is not an impulse down. This is just a consolidation. It's not an impulse down. And if it's just a consolidation with all these waves overlapping, at some point you should retrace through it and hit new highs. That's the way this Elliott stuff works. So, tomorrow's the jobs report. I'm not predicting what will happen. It's a positive pattern. We need confirmation. If we get it, this could be the end of this leg, but not the end of the drop. We have a wall into the close, so dropping is possible, but I'm not going to call it. It's the pattern with the early lows, so dropping is possible, but I'm not going to call it. Frankly, I think it's quite possible we gap up, but I just can't say. I just wait for it and let it tell me. So it's a pattern with the early low, and that's today's call.